Hey traders, this is Blake Morrow with Traders Summit. And with me, once again, I have Rohit Srivastava of India Charts. Good to see you, sir.
Good to see you too.
It is a crazy market. I think since the last time we talked, we've seen obviously a pretty substantial decline in the equity markets. I just want to ask you first and foremost, how are you navigating through these times?
So I have to use a combination of tools, and this really brings us to combine things like the daily and weekly momentum, or the weekly and monthly. Weekly and monthly is of course a much higher time frame, but right now either it's daily, weekly, or it's hourly and daily if you're really navigating. And we have to keep thinking about the potential of these sharp bear market rallies. And where are the cutoff points? Because it's nice to stay short while it's winning, but if you get that turnaround, you have to really flip, and that's something we just keep monitoring all the time. What are the levels at which we are going to flip? I think one of those happened in the last 2 days in India.
Okay,
and it's happening right now in the US. So, but then we've got to flip on that again. So that's
I'm actually really excited to see your charts. But before we go into your charts, let me ask you this, because you're talking about commodities. You've been pretty bullish the commodity space. How are you feeling about the commodity sector right now? Do you still feel that most of them are trending higher? Are you starting to see some peaks? I mean, we had nat gas just hit, I guess it was all-time highs here over the last couple of days. How are you feeling about the commodity space, and does it differ from, sector to sector?
So one of the first charts I will show will be based on what I actually ended up doing, is that I was bullish on commodities. I'm still long-term, but no more from a 6-month or 12-month perspective because of what happened on the dollar. So I think the last time we spoke, I was still in that mode where, the bullish turn had, not happened from bullish to bearish. And even though the Indian indices probably peaked in October of last year, I was sticking on with the energy commodity complex because they were still making new highs even in the face of a higher dollar.
Yeah.
So that was true till April. And in April, so after almost 1.5 to 2 years since, May 2020, that we turned positive on commodities, we've actually flipped. I gave up all my long metal trades, which is all my mining stocks in India. We sort of just closed the positions out and started to play the short side for the first time. So this is a big change we made.
Wow. That's a pretty big shift. And so from, you're near term more bearish because you're playing the short side, but overall you're still long-term pretty bearish the commodity space, correct?
Bullish the commodity space.
Bullish the commodity space, but you've been playing on the short side recently near term.
Yes. So okay. I think we may be in for a deeper correction, not thinking it's over yet, broadly in commodities. And so what that really means is that the entire rally in commodities from May 2020 to maybe March or April, wherever they've peaked, is wave one from an Elliot Wave perspective. And what we are really seeing is wave two. And wave two, second waves can sometimes be deeper than what we usually like. And that's what we are really preparing for. So once we are done with wave two, we can get bullish again. But that second wave can take its own time and be deep in terms of retracement. So that's the risk.
Okay, well that's interesting. Well, let's stop talking about it and let's start seeing what you're talking about. I'd love to see your charts, and I'd love to see how you're viewing the market at this point. So if you want to go ahead and share whatever charts that you brought with you.
So the first one I'm showing on the screen, which is right out of a report I write known as the Longshot report, and this I think you may be familiar with. It comes from Martin Pring's work. Which is the cycles between bonds, equities, and commodities. So this is an important one because bonds are usually the first ones to peak and the first ones to bottom, followed by equities and then by commodities. So we see 3 separate cycles over here: the bonds, the equities, and the commodities. And we've seen this repeat. Even if we go back, say to 2008, we would have seen the bond market peak first, where rates start rising, but stocks are still doing well. Then stocks roll over, and you see a point where stocks also falling along with bonds, and then eventually commodities peak many months later. So even if we look at 2007, equities peaked in the US, and then by June you had oil hitting the final high. So that's almost 6 to 8 months later. In fact, gold peaked in March of 2008. So you have that lead lag effect between the 3 sectors. Now the same thing if you look at the last 2 years. bond yields started to rise, which means bonds were falling, and they were falling as equities were still rising till Jan of 2022. Then equities rolled over. So you have both equities and bonds falling, but commodity prices are still rising for whatever reason. And they were rising all the way into March and April: oil, copper, aluminium, and so on. Now all of them have rolled over. So now we have reached the point where, all the three asset classes have turned down. And what we are really going to be looking for a longer term turnaround is a bottoming out in the bond market. So that's going to be the first signal. So when you get the bottoming in the bond market, which means you've reached the point where the markets recognize that the economy is weakening and there's a flight to safety out of equities into bonds. And then eventually equities bottom out. So it's not going to happen simultaneously. People think that, if yields start going down, equities might have, bottomed, but I don't think that's how the past doesn't show us that pattern. It shows that bonds will bottom first. Equities might still continue to fall for a while before they do. But the bottoming of the bond market might just be the first sign that we can end the cycle. We are not there yet.
Can I ask you a question at this point?
Yeah.
So I've been having some conversations with other traders and analysts, and the bond market, at least in the US, the bond market is actually starting to show some signs of life, whether it's a value play or whether people are seeing it as maybe risk aversion. But yields are starting to come down, especially on the lower end of the curve, and we are starting to see yields start to finally pull back here. So do you think we're close to a bottom in the bond market, at least near term?
So we've already had a small pullback in US bonds. So I'm just trying to open up that chart.
Yep, no problem.
We've had the small pullback, and the small pullback is slightly wedging in terms of structure. Okay, for all you know, it's probably complete, and triangular structures are sometimes fourth waves. So I'm wondering whether this entire move from here is wave 1, 2, 3, and 4. So if that is the case, then probably something like this. Then we still have one more move to the upside coming.
Okay.
Not completely sure. I'll wait for a little more breakout of this to be sure that that's what is happening. So I'm not jumping the gun here on the bond market having bottomed out yet. It could have, but I'm not so sure yet till it actually maybe breaks previous swings or gets, I see the weekly momentum actually start to reverse. Right now, if I put on my momentum indicators, probably they would have turned on the daily time frame, but not on the weekly time frame. So I would want to see something happen on a higher time frame.
That's fair enough. Okay. Well, thank you very much for addressing that question, but continue on, please.
So while this is happening, what we're actually seeing right now, so I'll just move to US equities, which I'm sure interests people, is that we've seen the US market drop in wave A, wave B, a bounce here, which is almost 61% retracement, and start wave C down. Now, how I'm really patterning this, and I am thinking that we are in a bear market, is that wave C is going to subdivide into a much larger 5-wave sequence. Now, if it's going to do that, then what we are really seeing right now is wave 1 complete, and this is a second wave pullback, which will probably retrace back to the fourth wave of the previous fall. And somewhere in this region, we should probably see the second wave complete, and we should accelerate down in a third wave. This is how I'm trying to map the current behavior of the market. So the current bounce should only be a temporary bear market rally, but it's not over. We are just crossing the 20-day average, the midpoint of the bands today. And once we close above that, we probably head to the top end of the bands or the fourth wave of the previous swing, somewhere closer to 4,300, 4,320. Or the upper band is around 4,250. So in that range.
And for people that are not so familiar with the Elliott wave theory, the third wave, if we do end up, let's say your wave count is correct, and I'm with you thus far, but the wave 3 would be one of the bigger waves, correct?
Well, by Elliot Wave rules, it says that the third wave is not the shortest. Now, of course, in principle, most of the time, we have found that third waves are the ones that tend to extend or be larger than the other two sets.
Okay.
It's not the rule. The rule is that it shouldn't be the shortest of the 5-wave sequence. But yes, it does have a tendency for third waves to be either larger or more powerful than the others.
Okay. Oh, well, that's fair enough and scary enough too. All right. So clearly at this point in time, you're seeing us in more of a bear market at this stage. And what do you have any alternate counts that could tell us otherwise?
Well, the alternate count would be extremely bullish, which means that instead of saying that we are going to be doing one of C, I could simply argue that C is over and we've completed an ABC correction and the bull trend should resume right here. But to make that presumption that the bull trend is going to resume, you'd really have to fit in a lot of macro data to fall in place. And so I would end up not just studying bond yields, I'd also end up studying what the dollar is doing, because we've had a very high correlation of equities with the dollar index. In fact, specifically for emerging markets, as I trade in the Indian market, every time you have a strong dollar, you have trouble in most emerging markets. So that's something that I think we have to watch closely. And of course, the amount of weightage I'll give the DXY is mostly based on how it is impacting the other asset classes. So most of 2021, I remained bullish on India and commodities, even though the DXY was going up because it was not having a material impact. But for the last 1 month, I am seeing this material impact even in our markets, in commodity prices, and so on. And so we're actually paying attention to it. Also, specifically because on a very long time frame, and so I've moved to a monthly chart here, we've broken past this trend line of the two highs. So my thesis from 2017 was that we are in a bear market for the dollar. This breakout that has occurred in the last couple of months sort of ended that thesis. So it was a nice time to be in that thesis because we've had this very good run, at least in the last 2 years.
Yep.
But what this breakout is doing, it's sort of killed the thesis on the dollar side. So unless we can really confirm now that the dollar is back in a bear market, we'd have to let the bullish trend play out. And I would look at the most recent pullback in the dollar only as a corrective move. So on the monthly chart, I would probably, for those again moving to an Elliot Wave structure, would be a series of 1, 2, 1, 2. Then you have a 3, 4, 3, 4, 3, 4, 5. So you'll have a couple of more swings before it's complete. And in the very short term, you actually already had a good pullback in the dollar index. So you're somewhere, I think, close to the last leg down of this correction, I think a little more lower. And then once that is done, I guess the dollar index would resume its upward trend and would again start seeing a downward impact, I think, on commodity prices and emerging markets. So that's what, and in fact, even US equities 0.9, over 0.9 correlation right now with the DXY. So I would actually be watching both bond yields, the dollar index, for those signals that we are actually going to see lower prices.
All right. So, to confirm then, your dollar thesis, if you're right, that bull trend is going to continue here, maybe a little bit more work to the downside. And if that happens, that's going to be, I wouldn't say a catalyst, but that would confirm that any S&P rally that we see is probably going to be met with resistance. Is that correct? A correct assessment?
Absolutely, that's right.
All right, great analysis thus far. So, how do you feel about commodities? You say you're playing on the short side of commodities, which has been a change for you. So, what are you looking at that really kind of reinforces that idea?
So, if I move, and I'll just add that within the entire commodity complex, the only place where we are still seeing strength is still oil. So, I have the oil chart right in front of me. I do think that we have completed a 5-wave sequence in oil, which means that if I actually mark the top here, we saw as wave 1 and 2, this entire triangular structure here as 3 and 4, then we've probably completed 5 waves up here. But what is happening in the very short term is that this is the only commodity where we are still not seeing downward momentum. So it's most probably doing something inside a trading range. Okay, so maybe this is the broad range. It might be a distributive pattern within the fifth, some complex wave structure, which I'll have to mark and explain. But I'm keeping it open that oil prices, if they get past this range, in fact, my initial view was if it gets past 112, then we can head higher, maybe even as high as 124 or 135, a retest of this previous high, which means a double top kind of structure could develop here before we actually see oil prices cool off. So this is the only place where we still see some kind of upward pressure. Even though it might not make a new high, it could retest the highs. But if I look at the rest of the commodities, which is the metals, base metals especially, all of them look like they are in a corrective move, but a bounce back within that. So we are seeing this bounce because the dollar sold off. I think that what you're seeing from here to here in copper, for example, it's a 5-wave decline. We'll usually call this wave A. Okay, we're getting a counter trend move. It can retrace a little more, maybe back to this range. And then we'll probably see a wave C decline after that. So we'll get a B, we'll get a C, and that could end up being a little deeper. We are also still not seeing a lot of downward pressure in agro commodities. Now, oil and agro, which is essentially the two places where I think inflation worries are lying right now, are still not showing any weakness in trend, which sort of reflects that you're continuing to see, you will continue to see that inflationary pressure in those two places, which is food and energy. But in all other commodities, which is metals, you're already seeing, you've seen one leg down, you're only seeing a bounce. And to really understand what is happening in commodities at large, I'll open up the Bloomberg Commodity Index. Okay. So the Bloomberg Commodity Index, in my mind, is probably done a larger first wave. Okay. And as I was explaining earlier, the breakout in the dollar, what it's really done, it's pushing most of these markets, which we are long-term bullish on, into a second wave correction. And what we're really trying to figure out is how deep is it going to be? Is it going to be a 50% retracement? Is it going to be a 61% retracement eventually from this range? So some kind of a pullback. And then later on, we might start a third wave. Now, this event could be 6 months or 12 months down the line. So we are still not there yet. And therefore, once we complete this rally that we are seeing in commodity prices, we'll look at going back to shorts on individual commodities. But we are seeing a lot of weakness. If I look at Indian miners, they have been selling off, even though commodity prices are bouncing back, because the governments and individual countries are actually putting duties. So we had export duties on India, so we can't actually export at competitive prices anymore, which means a lot of those products would have to be sold domestically. And so those companies took a big hit on Monday this week. And so metal stocks were actually down a lot, despite higher commodity prices bouncing back. But if I just look at this chart of the Bloomberg Commodity Index, what I can see here is a potential triangular pattern developing, which could be a topping structure. The main requirement for this is that we don't really go above this high, and that would then keep supporting a triangle. Otherwise, it would be a failure of structure. And so looking at this, I would expect that you probably hit this and then turn down.
Got it. Okay. Well, it's that would be interesting if we didn't make a new high. That would be the definition of at least starting to develop some sort of trend change. Now, I know you trade the India markets quite a bit. So can you give not just myself, but the viewers that are coming to see the charts that you follow specifically, how are you tackling the Nifty 50?
So I'll start with the hourly chart of the Nifty 50. And what has happened here is we were in a steep decline since the top in April. So that's sort of where it gave us a sign that we are rolling over. And also where the Nifty Metal Index made a new 52-week high. So that was my reason for turning from bullish to bearish. And once we've done that, I've been trying to map out a 5-wave decline over here. So we had the first wave into late April, second, the third into the recent low in May. And then we've been waiting for this bounce back to complete. I think this bounce will probably continue now a little higher because today was the option and futures expiration in the Indian market. And so you've got some late day pullback. And this makes it look like we're doing a broad pullback inside a channel. So A, B, and C to the top end of the channel is what I'm looking at, around 16,500. And then from there, I think the next leg down would probably start. That's my immediate expectation. And that next leg down could actually be probably as big as these previous legs we've seen here. So it would actually push us towards around, I think, closer to 15,000. Because if I actually look at a broader chart, I'm going to just go to there's a lot of markings here. So I'll try to take a blank chart.
That's okay. I'm following you, but people at home might not be as closely.
Yeah, so I'll pull out a blank chart.
There you go. Great.
So when we look at this, what you can broadly see, any technician will recognize this as a broadening pattern. Okay. And so this whole broadening formation has occurred along with what we call as classical Dow theory intermarket divergences, meaning that many sectors made new highs during this period. In January, we saw a new high in the Indian IT index. In April, we saw a new high in the metal index. We also saw it in the energy index, the power index. And now you've reached the point where all of those indices have started to roll over and decline. So there's been a broad distribution, I would say, in the Nifty 50. And what I was talking about is once we break out of this range on the downside, which should be some kind of a flat or a flag pattern, we should eventually head down towards this lower line, which is now falling slightly below the 15,000 mark, is my sense. And on a much broader scale, go back to what I would call as the fourth wave of the previous advance. This triangular structure here would be a fourth wave of the previous advance. The fifth ends within this. And so we should eventually attempt to come back to this line, which is closer to around 14,100.
Well, that means if you are trading the Nifty 50 and you're looking to put some money to work, you might have a little bit more downside to go before you can actually deploy some of those funds. Rohit, I really appreciate you taking a look at the markets for us and getting your views. I love Elliot Wave analysis and theory because it's one of those things that me as a trader, I don't see as easily as people like yourself. So relying on a professional like you, it's where I like to get my information. But let me ask you this. If I'm a trader, I'm at home and I want to learn more about you because I also like your work. How do I follow your work specifically?
So what we do is we blog every day on this website, which is indiacharts.com. The easiest way to actually stay in touch with the work, though, is using the India Charts app. It's available both on iOS and Android because the app allows you to get notified every time we write. So what I do is I write the Longshot report, which is a once in a month or 1.5 month strategy report, which sort of gives the entire macro thesis of what we are thinking about, how we expect all the different elements to move between commodities, currencies, and equities. And then we track that based on a combination of Elliott waves and momentum indicators. So we use our own momentum indicators and sentiment, and we publish that on a daily basis. So as and when we see a setup which is of interest, we write around 5 to 10 articles every day. So that sort of tracks the day-to-day movement in different markets. And as and when we actually post an article, you get notified on the app. So that's the best way to really stay notified. Otherwise, even if someone's on the desktop, he gets an email newsletter of the updates, and that's how he stays up to date with what we're doing.
Well, that sounds great. I'm super excited to learn about what you do and see the charts that you are offering. And I want to thank you so much for spending your time with us here at Trader Summit. And I look forward to the next conversation that you and I have.
Thanks, Blake, for having me. And it was a great discussion, and it's a tough time because these are volatile markets, and you need to really swing both ways if you really want to stay on top of it.
There you go. And I agree with you wholeheartedly. All right, Rohit, have a great day and we'll talk to you soon. Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.